if you're one of those companies, right, that get beyond the point of all the venture capitalist questions about what's your product or your service and how you're going to compete and how you're going to price it, if you get beyond that and you say, all right, we're ready to make an investment, how do you set the price for that investment? One of the most difficult things in venture capital, right, on both sides of the table, how do you value a new company? In the public markets, you can go out today and figure out what the price for Cisco or IBM is. It's set every day in the public markets. In the private markets, like venture capital, it's not set, right? So there's no market demand out there like there is in the public markets. So what do? We, as venture capitalists, look at other companies, right? Other startups that are in that similar situation. Completely different companies. They're not going after the same product or service, but they are at the same stage of company growth, right? And so we try to determine based on that, right? Do you just have a PowerPoint? Do you have a product that's working? Do you have customers? Do you have growth? How deep is that management team of yours compared to others? That will be, a lot of what goes into that. The other is just our experience, right? We do this and we see, 10 companies a day. And so we have an inherent advantage as venture capitalists of just knowing, okay, we saw that company, we know they got valued, we know they raised money at a certain valuation, maybe by us or someone else. And so when we see the next one, it allows us to have a sense, at least the range of where that valuation should be. More than anything though, right, we're just trying to figure out how much of the company that we can get that gives us the return that we're looking for and still provides motivation to the entrepreneur and the entrepreneur's team to work as hard as they need to be working. And if it's all successful, they win and we win.